Good morning, good afternoon, and good evening, friends. Let's continue with the capital and revenue expenditure and receipts. Right? I'm in CA Foundation, Unit 1, Chapter 1, Unit 4. Let me correct here. It is Chapter 1, Unit 4, Capital and revenue expenditures and receipts. So let's continue. I'm in illustration 4. State with reasons how would you classify the following items of expenditure. Overhauling expenses of 25,000 rupees for the engine of a motor car to get better fuel efficiency. Yeah, we saw this earlier also. Um, Overhauling expenses, since this is going to improve fuel efficiency, it's a long-term benefit, so it should be capitalized. It should be capital expenditure. Right? Then, second one, inauguration expenses of rupees 25 lakhs incurred on the opening of a new manufacturing unit in an existing business. So, inauguration expenses of 25 lakhs amount seems to be very high, 25 lakhs, right? And incurred on the opening of a new manufacturing. But is it going to give any business impact? It's going to have any business efficiency for the company? Probably in the short term, in the first year of operations, right? uh, Inauguration expenses of new manufacturing unit. So it will have, because the inauguration, sorry, so people would have come in, and then there can be an immediate business benefit that can come in, not a long-term benefit, because so this is not going to have a sustainable business for the company. Inauguration is a short term, so it can be treated as revenue expenditure. It cannot be capitalized, though the amount is really high, relatively high. It cannot be capitalized because the benefit of it cannot be seen beyond a substantial beyond a definite period, right? So third one, compensation of rupees 2.5 crores paid to workers who opted for voluntary retirement. Compensation compensation for voluntary retirement of rupees 2.5 crores. Amount again is very high, but it is in the nature of salary, right? It is compensation is basically a cumulative salary, say for a voluntary retirement, depends upon the number of years of service an employee has put in. Company will arrive at a voluntary retirement plan, and it is an advance payment of salary that is being given to the employees who opt for voluntary retirement. Since it is an advance salary paid, or a lump sum salary paid, or a lump lump sum salary paid. So this has to be treated as revenue expenditure, because it's not going to give any substantial efficiency to the substantial business benefit, business impact for the business. Yes, to some extent, the impact of it can be seen in the profit and loss account. So what can be done is, it is revenue expenditure, but it can be deferred to several period. Like, the amount is, if the annual salary component is say 50 lakhs, and now we are paying for 2.5 crores, so it can be apportioned equally to the subsequent 5 years, 50 lakhs each year. So that way it can be deferred to the several periods, depends upon the payout component, right? So that is how the treatment has to be made. It should not be uh, just because the amount is high, it cannot be capitalized. It has to be capitalized. Of capitalized expenditure is a very relative term. It has to go on a case by case basis. Right? Let's get into the next one. Let's move into illustration 5. Hope this is clear, right? Just in case you're not clear on it, obviously please write to me, and I'll clarify the doubts. What we have? Let's. I'm just copying this. Illustration 5. 5. So 1. 10,000 rupees spent as traveling expenses of the directors on trips abroad for purchase of capital assets. Yes, you have to see, right? Purchase of capital assets. Here in earlier sum also we saw like amount spent on um, installation of a machinery, right? That should be capitalized. Wages paid to employees for towards installation of machinery should be capitalized. Similarly, this amount is spent only for purchase of capital assets. So if the travel expenses is towards some conference, some seminars, during that seminar, if an asset is also discussed, etc., then we have to think what is the relative component of the travel expenses related to the asset, right? But in this case, the travel expenses is purely to by the directors on trips abroad to purchase of capital assets. So purchase of capital assets and its related travel costs to be capitalized and added to the asset value and added to the asset cost, right? Second one, amount received from trade receivables during there. This is a normal collection of from the debtors, trade receivables, revenue receipt. Revenue receipt as it is in the normal running of business. Right? Third one, amount spent on demolition of building to construct a bigger building on the same site. Yes, amount spent on demolition to construct a bigger building. Without this demolition of this existing structure, bigger building cannot be built. So this should be capitalized and added to the construction cost. Then insurance claim received on account of machinery damaged by fire. Machinery is an asset. Any claim that is received, insurance, let me write here, insurance claim on machinery damaged by fire. So machinery is an asset and any claim that is received towards compensation has to be treated as capital receipt. One clarification here has to be given, right? Because the machinery is an asset, and one assumption is the compensation that will be received will be used to purchase an additional machinery or an alternate machinery, right? That should be assumed, and that way the assumption it should be given, and then capital it should be treated as a capital receipt. Right? Let's get into the fine. Let's continue in the next class. But if you have any doubts or clarifications on these two questions, what we have solved, please send an email to me at babupriya@rediffmail.com, or you can obviously send an comments or post your comments onto the class in the channel so that I can come back to you immediately. Thank you, friends, and have a great day.